Too many traders panic in the morning right at the open. But what if I told you that that kind of panic creates the opportunity? In this video, I'm going to walk you through one of my all-time favorite setups, the perfect morning panic dip buy pattern. I'm going to break it down step by step, draw out the full pattern, and show you exactly what to look for from the initial drop to the ideal bounce dip buy entry. Understand, I've been doing this for over 25 years. I've seen this setup over and over and over again, thousands of times. So if you're prepared, it can actually be one of the best low risk, higher reward trades out there if you're prepared ahead of time. Here is what the perfect morning panic setup looks like and what to look for before the market opens. You have to be prepared ahead of time. I don't want anybody waking up at 9:28 a.m. Eastern and then being like, okay, where's the panic at 9:30 a.m. Eastern in 2 minutes? You gotta wake up early, drink an energy drink, drink some coffee, set your alarm, wake up earlier so that you can be prepared when there are opportunities. So for me, I'm always looking for recent runners. Stocks that have been running for 1, 2, 3, 4, 5 days. These are the stocks that have already spiked big in the past few days, weeks, or even months. The longer the run up, the better. Let me show you with my little artistic skills. Here is a chart. If this stock has been running, each one of these is a candle. Each one of these candles is 1 day. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. If it's spiking this much, the higher it goes, the more prepared you should be. Because why? None of these stocks that go up every single day, especially, let's say this is the volume bar. Let's say the volume is pretty much the same, but then the volume starts to get crazier because guess what? More and more traders are interested. That's where all of the opportunity is, where there's an overextended stock, there's a big run-up stock, and there's a heavy volume stock. So after, let's say 10 days, that's extreme, but even if it was like 3 or 4 days, let me draw another one, right? Let's say it's just 4 days, right? And then you have the volume, let's say it's growing, and the volume can't sustain that much. When a stock goes up 3, 4, 5, 6, 7, 8, 9, 10 days, the volume is going up 3, 4, 5, 6, 7, 8, 9, 10 days. It can't last. So what's next? Every single day you should be prepared for a morning panic. Ideally, a low float, low price stock that's been on everyone's radar, because that creates more volatility. You know, these are the plays that trap newbies who chase too high, and then when they panic, that's where I like to step in with a plan, because now the newbies, the weak hands have been weeded out. So let me show you. Again, you have 10 up days, and then you have one big down day. I have 2 charts here, right? So on this down day, you're looking for the bigger the panic, the better. So these are daily charts, but let me draw a third chart over here. So each one of these in this example represents 1 day as a candle. But now intraday, let's say the line has been created like this. Okay? Not my best work. But the play is going up, okay? The longer the better, because that gets more people interested in it, more traders interested in it. And then the morning panic sometimes happens, right? And it can retrace like 30, 40, 50, 70% of the gains. You want to look for this. Showing this on the daily chart, why is there a morning panic? What is a morning panic? Why does it create opportunity? Because panic equals emotion, and emotion equals opportunity. Morning panics usually happen in the first hour of the market open. That's when all the FOMO buyers, the fear of the missing out buyers from the day before, they start seeing red. And you'll see a stock that was so hot yesterday and, ideally previous days, tanking hard right at the open. You see a big drop, heavy volume, tons of panic sellers. This is what I'm looking for. And again, let's look at the volume on this little chart, right? So these are volume bars. But then when there's a big panic, that's kind of like the flush. You see the volume will just explode. And the reason why I'm using red is because there's more sellers than buyers. That's when everyone starts panicking, and a lot of traders use stop losses along the way. So now let's add some numbers. So let's say this is 1, 2, 3, 4, 5, 6, $7 a share on this one, for example, right? When the stock starts tanking at these key levels, you can draw support lines You can draw basically lines here. When it starts dropping below 7, 6, 5, 4, 3, this is when a lot of newbies have their stop losses that get triggered. Because what if, let's say you're a newbie, you're in from 1, the stock goes to 2, to 3, to 4. You want to protect yourself. You've heard that stop losses are the thing. A lot of newbies like using stop losses. That creates a tidal wave of sellers when every single stop loss is triggered. If you remember the movie Inception, right? Like it's like a dream within a dream within a dream, and everything gets triggered. Remember, like Leo has to like wake up from the dream. They have to like put him over a bath and they kick the chair out from under him, and then he wakes up from the dream. This is being triggered. All of these stop losses are automatically being triggered. So how do I time my entry with these panics? Where do I look to dip buy? I don't try to catch a falling knife. If you try to catch a falling knife, in reality, you're going to end up with bloody hands. So I wait for these stocks to fall. I wait for the big fail. The bigger the fail, the better. Then I want to see a floor. I want to see it start bouncing a little bit. Then I react. So let's draw one other chart here. Right? So we're going from daily charts. These are two different examples, like a 10-day runner and a 4-day runner. But no matter what, they have this giant panic. So let's say this panic is happening intraday. It's coming down, okay? You don't know how far it's going to come down. You have no idea. But oftentimes, you'll see a little sideways action. Now we're going to pick up the green because you start to see a little bit of a bounce. This little bit of a bounce doesn't look like much on the chart, but at the same time, that could be the beginning of something. So going back to this, in my example, the stock dropped from 7 to 2. This is extreme, but let's say it bounces here at 2. Usually you'll get if a stock has gone up to 7, you'll get a bounce to a drop to 5, 4, 3. I doubt that it'll go to 2. But in this example, why not? This is hypothetical, so we can look for the perfect dip. But the point is, no matter where it bounces, you must be there for that first green candle or the first few green candles. I'm going to insert a video here from one of my students, one of my millionaires, Huddy, actually caught live one of these panics on a stock, SHMP. I was dip buying it. This was years ago, but you'll see the stock dropping. The stock had gone from 10 cents to $1 and dropped all the way to 50 cents in one morning. And you can see on the level 2, you can see on the chart when it started to bounce. This is the pattern we're looking to buy.
As we get to this 50 cent area, I'm just going to cover some just to be safe, because this is an important psychological level. Just the 50 cent area. And it does look like we're bouncing here. The bid is actually supporting now, and we are getting that uptick. So this is a turn. Quite an important one. And you'll see it just turned right there. It caught at 51 cents and it started ticking up. So I'm down to 10,000 shares. I've locked in roughly $6,000 with 3,800 still on the table, and then I just longed it in another account, because that's that first turn that we usually look for. And I probably should have covered my whole position down at 58 cents, but I do think that there is room for more downside. You can see we're really stacked up here. And if this bounce gets going enough, I will look to short into it. I've locked in roughly 6,500 out of the 9 grand that I'm up. I have a long now from 53 cents, 7,000 shares, so another 700 to tack on at the moment. And again, I'm just going to use the level 2 to kind of gauge. Remember, the last time we tried to turn at 60 cents, this is kind of where we failed, where a lot of longs got sucked in. So I wouldn't be surprised to see failure here. I like my long right now because it's kind of hedging my bet. I have roughly 7,000 shares long and 10,000 shares short. So if this does drop below low of day, I'll just sell my long and let the short continue to ride. If it decides to catch and then spike up towards green red, I'll sell my long as I begin to get ready to short. We'll find a better way to do these videos in the future without me having to panic all over the place and figure out how many shares I got in one account and open up other windows. It's probably just a dual screen type thing that I need to ascertain to make this a little more clear for you guys, and I'll do that in the future. I will. Nice. So far, this bounce is really looking nice. Unfortunately, I only have 7,500 shares. But now we're pushing past that previous high that we just made, and we got a stacked bid and pushing up against the ask again. So this is looking nice. Got that really nice big green volume candle here that shows you that the dip buyers came in, and we had that really nice 30% or so panic. And that's the OTC dip buy. Right into that 50-cent level, which is why I started covering. And now it's a matter of how high can this bounce go, and does it set up for a good risk-reward scenario? For now, we're still pushing. The bid is stacked and the ask is thin comparatively against all these bidders that are in at 630 and 6.625.
This is when I start thinking about an entry, but only if the stock proves it can hold. And I'm taking a small position because, again, sometimes it's a fake out. But it's all about risk reward, okay? Risk, I place it right below the panic. So if I'm excited about this little bounce, what if it doesn't bounce, right? What if it comes back down? What if this little bounce is a fake out? It could come back down. So you see this line here, this previous low, and this isn't an exact science, but I don't want it to cross this bottom, because then it could continue to free fall. So you get to choose how aggressive you want to be, but usually I put the former low as the bottom. And in that example with SHMP, filmed by Huddy, shout out to him, there was no secondary panic. It had already dropped 50%. So for me, I don't want to risk a falling knife, but I'm looking for a reward. Ideally, a quick 10, 20% bounce, sometimes even more. In this example where the stock dropped 70%, I would probably look for like a 30% bounce. No matter what, I never hold in hope, especially if it keeps going lower. If it bounces for me, I take the win. If it fades, I cut it fast. It's a very specific trade, a very prepared and meticulous trade. Understand this is a morning panic dip buy. If you want to find stocks like this before they panic, then I encourage you to join my free weekly watch list of tickers that I'm watching every single week. And this pattern shows up a lot. That way you can be prepared. All you have to do is sign up on the link below. It's 100% free. Sign up and get on the watch list, because I'm always looking at big percent gainers. That way you can be ready for the morning panic before they happen. One thing I should know, what to avoid with morning panics. I don't want you making these mistakes. Let me be clear. Just because a stock is dropping doesn't mean that it's a good dip buy. There could be a stock that's dropping like this, and let's say it's dropping like that, and it has a little bit of a sideways, maybe a little bit of an attempted bounce right here, but then it comes hard further down, okay? You don't want to risk this because you don't know how low this can go. Look at this. You must be careful of traps. Do not buy too early. You have to wait for confirmation. And guess what? If it cracks the low, you simply get out. Also, avoid stocks that don't have big recent runs. Like a lot of stocks just panic, but maybe they have negative news. I want big recent runners. If it's not a big recent runner, if it's not a former spiker, you don't really have the emotional buyers. You don't really have the newbies lured in. So skip tickers also with huge floats or little to no volume, they move too slow. I'm looking for this very specific pattern. I want the volatility, I want the liquidity, and I want to take my small gains. Some people will say, Tim, you can make a lot more, swing trading or hodling. I don't care. I've made millions of dollars being a sniper like this. I will never hold these too aggressively. I'll never chase after too big of a bounce. Let's say in one more example, the stock panics big and then bounces big, right? Sometimes it's a V shape. I don't want to chase that V shape. If it's too fast, I'm okay with missing a play. I'm okay with that, okay? There's always going to be another play, but you don't want to chase this V, especially when it's bounced too much. In an ideal world, let me draw one more, last little pattern right here. In an ideal world, the stock is dropping. Maybe you get a little sideways action for a little bit. You get a little bounce. Whether it's 5, 10, 20 cents a share, doesn't matter. But you buy it on this little bounce right here, okay? That way you have a very specific risk. If it goes lower, you cut it. But ideally, in a perfect world, it bounces even more. And you take a profit from here to here. And this, let's say, is plus 10%. That's it, okay? Trading like a sniper. Now, a lot of people will say, Tim, how much can you really make? My average trading profit over 25 years is just $1,500. So I'm risking roughly, or betting $15,000. I'm risking, if I'm wrong, usually like 1 or 2 or 3%. And ideally, I'm making $1,500. That's it. Over and over and over again. This pattern has been working for me for 2+ decades. And I love it because it rewards discipline, patience, and preparation. Do not be the trader who panics. Do not be the trader who chases. Be the one who profits from the panic and gets paid based on preparation. That's what all my millionaire students and I love. And understand there's not always going to be perfect morning panic dip buys, but when they come, you should be prepared. And if you like this video, don't forget to subscribe to my channel because I'm going to be going over more of my favorite patterns that every serious trader needs to know. And the more prepared you are, the better your odds of success. Leave a comment. Let me know if you like this. Comment on my artwork. I think it's pretty good.